don't we just get into it? And perhaps you could just start by introducing yourself, telling us what you do like day to day, and a bit more about Southwest Mutual.
Sure. Um, so my name's Tony Greenham, and I'm the Executive Director of Southwest Mutual, which is a startup mutual social bank. I'll explain a bit more about what we're planning to do. And I'm a senior fellow of the Finance Innovation Lab, and I've been working in the space of community and ethical finance for about 15 years.
So yeah, do you want to talk about Southwest Mutual then, and just how where you're at with it, how it's all going, and then perhaps more on what sets mutuals apart from the kind of more traditional big banks.
Okay. So the thinking behind starting a mutual bank in the UK is partly because it's quite unusual to not have smaller, local, socially orientated banks. Most countries have them, and a lot of countries have cooperative banks. Now, I mean, you could ask, why does that matter? And I'll come on to explain the benefits of mutuality in a moment. But just to sort of give an example of how different the UK market is in terms of the choice that people have of where to bank. In places like Germany, you get a choice not just of big commercial high street banks like we're used to, but you also have local public savings banks. There's about 400 of them, one for every big city and region. And they also have a good number of local cooperative banks as well. So you have a real choice of both as a consumer where to save your money and where to go for loans, but also businesses, very importantly, have a much bigger choice of who to bank with. The same is true of Canada, of the USA, of Japan. I mean, you name it. Other countries tend to have a much richer variety of banks to choose from. The rest of Europe has 2,800 cooperative banks with tens, hundreds of millions of customers and members. So we think that the UK should have more choice and more variety too, and we definitely think that that should include mutual banks.
Yeah. So how do mutual banks, how are they kind of formed differently? Like what's the model? What's different about that? And how do they serve communities better? Can you give some examples of different things that they do, maybe like projects or particular
Mm.
products that are different?
Sure. Well, the key difference between mutual banks and commercial or shareholder banks, obviously, is that mutuals are owned and controlled by their members, by their customers. So we do have one form in the UK, of course, which everyone will hopefully be familiar with, which is building societies. So in the UK, we have a major sector of mutuals that are building societies, but they, by law, are restricted to doing certain products. So the main thing they do, of course, is residential mortgages and savings, and one or two, nationwide in particular, will do more products. They have current accounts and do personal loans and credit cards as well. But we don't have a full mutual bank sector in the UK that also does business lending and the full range of products. So that's why we think there's a gap there. Now, what mutuals, be the building societies or mutual banks, the reason why that might be better for consumers, it's not just a nice to have in a way that customers are the members and control the bank. There's lots of evidence that shows that where you closely align the interests of customers with the owners and managers of a financial institution, you get better customer results. So there's always a bit of a tension between maximizing profit for shareholders and giving the best value services to customers. There's always a little bit of a tension there. People from shareholder banks would argue the opposite, I'm sure. But the reality is that if the members own the profits because they are the owners, then that tension sort of disappears, really. And the interests of everybody is aligned. Owners, managers, customers should all be interested in one outcome, which is fantastic value for money and service and products for customers.
Mm. And can you talk a little bit about your plans in terms of the sort of environmental and social support that your bank and other banks like yours can give to communities? So, I mean, like supporting farmers or other kind of environmental projects and things like that.
Sure. Well, the research that has been undertaken into socially orientated banks. I mean, I did some research when I worked at a think tank called the New Economics Foundation into this form of banking. And what you'll consistently find is that stakeholder banks, as we call them in general, that are smaller regional ones, they do better on financial inclusion. They do much better at lending to small businesses. They do much better at devoting their lending to the real economy rather than financial speculation. And they also are much more resilient during recessions. Now, that's historically speaking. I think that what you also find as this has become more into focus for citizens in general, but also consumers of financial products, is that they have a higher regard for the environmental impact of their activities and their lending, and will also tend to perform better on that. And that's partly a question of scale, because the banks that we're looking to set up are regional, smaller scale banks. And the reality is that if you're only serving small and medium-sized businesses, you're not bankrolling tar sands extraction in Canada. You're not bankrolling, deep sea oil extraction. You're not serving the major corporations, global corporations, that be they mining or carrying out operations that are environmentally and socially destructive. It's just out of scope. Now, when you put on top of that being purpose driven means that you will take into account much more the environmental and social impacts of the businesses you do lend to, then overall it's a form of banking that aligns much better with high environmental and social standards that increasingly people are looking for when they're trying to find a home for their money.
Yeah, so I think people are so used to seeing, the regular high street banks, and it's like the industry has been monopolized by them. We're not used to seeing these smaller local banks, as you were saying earlier, whereas like other places in the EU are much more used to having them there. So it might be that people are a bit afraid to try some of these smaller banks. Are they any riskier? Do they cost more? Is there, are the services much different that it becomes a problem? How can we reassure those people who might be interested but might be put off by some of those kind of potentially misconceptions?
Sure. Well, I think at this point it's worth emphasising that although there are a number of groups around the UK working on setting up a regional mutual bank, including Southwest Mutual, none of us have started trading yet. So, and that depends on getting a banking license as well as raising enough starting capital or funds. So, the banking license point there is very significant, because what that would mean, hopefully when we achieve a banking license, is that your money is protected by the deposit guarantee scheme. Up to £85,000. So from that point of view, there is no difference in risk between depositing with a smaller bank or an ethical bank as with a high street bank, because as long as you're not putting in more than £85,000, it is protected under that scheme. I think the second point I'd like to make is that, I'd like to obviously mention credit unions as well, because they are an existing form of smaller cooperative financial institution. They're not banks. It's a specific form, and that's also an ethical form of banking, because they will serve more financially excluded people with loans, and increasingly with forms of current account provision. Now, those do tend to cost a bit more than what you could achieve with a new challenger bank, a digital-based app bank, or a high street bank. But some people are willing to pay a slightly higher charge for banking services from an institution that they feel that firstly they might get a more personal service from, but also an institution that they feel is aligned with their values and is doing good in the world.
Yeah. So we haven't really talked about the problem enough yet. So let's talk about that, because I mean, trust in the big banks is at an all-time low. I think it has been for a while now, particularly since the financial crash. But what is it that infuriates you the most about big banks and their behaviours, and what should ordinary consumers be keeping an eye on?
Well, I think I think you're right about trust. I mean, it has recovered a little bit since the dark days, but I think that our philosophy is that you'll hear a lot of banking executives and people within the industry, and perhaps even economists and commentators, saying that the core skill, if you like, of banking increasingly is about handling data, or it's about digital, capabilities and so on. Well, those are important. We all want to have a smooth service, and nobody wants to have their data lost, for sure. But actually, we argue that the core skill of a bank is to be trustworthy, is to deserve and to maintain trust with its customers. And financial products are particularly sort of unusual in that respect, I guess. I mean, not unusual, that's the wrong word. This is true of other markets. But the thing about financial products is that customers generally, unless they're financial professionals, or they take a lot of time to sort of educate themselves and they're quite sophisticated, they're quite hard to understand. Right, so when you go shopping for food or clothes or get a haircut, right, you know what you're getting. It's sort of generally it doesn't require you to understand a sophisticated product. But financial products are inherently one where it's a bit like, going to see a doctor or a dentist. You are going to somebody, you're seeing somebody who has had a great deal of training and experience in something that you wouldn't possibly try to sort of operate on yourself, extract your own teeth, or sort of try and diagnose a complicated medical condition, right? So banking's a bit the same. So we think that really bankers should behave in the same way as doctors and dentists, and focus wholly on the benefit of the patient. Now, the problem is when it's being delivered, that's not really how the banking industry has gone over the last sort of, few decades, really. It's just seen itself as a product or service like any other, like selling televisions or cheese. So you just sell as much as you can, and as long as consumers buy it, it's fine. And if it's all about maximizing sales and profits. And that culture, unfortunately, I think you asked sort of what I don't like about banking, as it's happened over the last 10, 20 years. It's that the culture has become far too much about sales and profits, and far too little about caring for the customer and caring about the best possible outcome for your customer, in the same way as a doctor cares about the best possible outcome for the patient. We need a little bit more of that professional approach, I think, to come back into the culture of banking.
And when I talk about sort of banking, investment, pensions with people, I'm always talking about it through the lens of positive impact when it comes to people and planet. Are there some actions that the big banks could be taking? Are there things that they could be doing in the area of climate, environment, social, that they're just not?
I think there's two answers to that question. I think one is about much better transparency about how money is being used. Now, there's perhaps things are mildly improving, but I would say it's still very hard if you're a customer of one of the big UK banks and you go and deposit £1,000 to really understand how your £1,000, what it's funding, is very difficult. I mean, that information there might be some information buried in the sort of hundreds of pages of annual reports that the banks put out. But what you really want to know is, of my £1,000, what have you used it for? I mean, the answer, by the way, probably would be something like, the biggest chunk would be on financing financial speculation and trading. Perhaps only £2, sorry, £20 of that 1,000 might be lent to small businesses in the UK. Certainly, a large chunk of it would be on mortgages, but certainly amongst the businesses that are being financed, there won't be any information that tells you how many of those might be to do with fossil fuels or environmentally destructive industries. So point number one is just a lot clearer information about what your money is being used for. And I think it's even worse in pensions and investments, because a lot of things that are labelled as environmental social funds or ethical funds, when you actually dig into them, it just means that they own slightly less of the destructive stuff, not that they don't own any. And that's not what most people would understand, at face value of what a so-called ESG, environmental social governance fund, should be like. So the industry, both banking and insurance and pension funds and investments, I think they all need to clean their act up considerably on being honest and transparent with consumers about how their money is being used. That's point number one. I mean, point number two is, although it'd be helpful to be transparent about the fact that you're funding, a company that's sort of doing social and environmentally destructive things, it'd be far better if you didn't fund that company in the first place, right? Which I think was the question you were really getting at. Now, I certainly think so, but I accept that to an extent, individual banks here, there does need to be responsibility taken at a collective level, and that inevitably involves policy and governments to set the rules on behalf of us as citizens within which companies and banks and insurance companies and so on operate. So, in other words, what business really likes is a clear set of rules and a level playing field, and then business can do what business does best, which is sort of get on and kind of innovate and deliver within that framework. So I think there is a responsibility for us, I suppose, perhaps as voters, to make sure that we vote in governments that are going to aim for the UK to set the highest example in terms of markets which deliver great outcomes for people and planet, to use your phrase from earlier. Now, if you're not going to get that, then I still think that companies have to take responsibility for the impacts that they have, and that certainly includes banks. And there's an argument, there's a slightly circular argument that happens here, because if you say, well, should a bank be providing loans for people to buy diesel cars anymore when that we know they're going to be phased out? We know that they're terrible for air quality and they cause pollution and lung damage, as well as the carbon implications of using diesel cars. Should a bank really be providing people with loans to buy such cars? They would say, as long as people want to make that choice, we shouldn't dictate to them about their choices. We should just respond to demand. So there's an interesting, all I can say is that we want to set out a choice of bank where we don't lend money for that sort of thing. And we believe that there's a strong demand from plenty of people to want to bank with a bank like that. But I also can see the argument that it's not for banks to tell people what they can and can't buy.
Yeah. You mentioned financial speculation a couple of times there. Can you explain what you mean by that? And then can we, don't have to spend too long on that bit, but then can we talk about the view that banks and businesses are there to create profit? They're not there, they're not there to deal with kind of social and environmental problems. It's pure profit. That's it. What's your response to that?
Yeah, well, on the first point about financial speculation, I guess most people wouldn't be aware, and why would they, of the amount of lending that's done by banks to private equity companies, to other forms of investment companies that will borrow huge sums of money from large banks to essentially speculate in financial markets, or in the case of private equity companies, maybe buy out an existing company and try to sort of cut its costs drastically and improve its profits in order to make a short-term um, speculative gain, one might say. And you can argue about the rights and wrongs of that sort of, they're called leveraged buyouts. So where you borrow a huge amount of money to buy a business, and then but you're only holding it for the short term to make a profit rather than investing in that business for the very, very long term. You can argue about the rights or wrongs of that, whether that's a useful economic activity or not. I personally think that most of it probably isn't very useful in terms of social and economic outcomes. But I guess the point I was making is that most people who put money in one of the big banks would have no idea that their money would be used for that sort of thing in the first place. So again, we get back to this double problem of being honest and transparent about how people's money's being used, what it's being used to fund. And then secondly, the question about, well, should you be funding those things anyway? Because, they're not really for the benefit of society as a whole. And that sort of comes to your second question about, and fundamentally what are banks and perhaps other companies in general for? Well, this is a long-running debate. I mean, we had the famous declaration by free market economist Milton Friedman in the early 70s, who said that the social responsibility of companies was to make as much money as possible, and that you could rely on the market to deliver, the best possible outcome for everybody. Now, I think, to try and put this as neutrally as I can, I think most people and economists now would say that's a very heroic assumption that markets will always deliver the right outcomes. And in fact, we know that they don't, and economists have always known that they don't, because not all of the environmental and social impacts can be reflected in the prices in a market. And so you can never have the best possible social and environmental outcomes from a market that has no regulations. You have to make sure those environmental and social outcomes are somehow reflected in order for a market to work really well. Now, in addition, there's this question of the institution, the company, and what its purpose is. And this is a long-running argument as well. And I think increasingly in recent years, people have been pointing out that for the very origin of companies and corporations was that when they were formed for a societal purpose. They weren't formed purely to enrich the shareholders. The shareholders were people providing the investment capital to start the business on which they expected a reasonable return. Absolutely fine. I don't think anybody would argue that if you're going to invest in a business and put your money at risk, you should expect a financial return. But that's not the point of the company, and that's not why the company was set up. The company is set up to provide something useful for customers and for society as a whole. And I think a very good test, really, of a bank or any other company you want to deal with is try and find out what they say they're there for. Have they got a clear statement of what their purpose is? And does that sound to you like something which is socially useful or that you think is contributing more broadly to society in a way that doesn't harm, the planet? And if you can't find that statement, or if that doesn't seem very strong, or it doesn't seem very sort of believable, then maybe that's not a company you want to deal with.
Great answer. Thank you. I've got two questions now just on climate change and the risk to our economy, stability, that it poses. So the first one is, I wonder if you're able to talk about what the recent Bank of England climate stress tests were, what they're all about, and what the results might mean for ordinary savers and customers.
Yes, in some senses, I think the Bank of England, and this really started under the previous governor, Mark Carney, has been at the top of the international league tables on doing stuff about climate change. However, what it's done, in common with other central banks elsewhere and regulators, has its limits. So first, the good. right? So the Bank of England did introduce, and the banking regulators have introduced these requirements for banks and insurance companies and other financial companies to identify what risks climate change poses to their businesses, and to be able to articulate them, identify them, and, as you mentioned, show that if those risks turn out to be worse than they're expected, what impact does that have on the viability of the business, the so-called stress tests. So, that's all well and good, and it identifies two types of risks from climate change, and this is interesting to think about. One is the physical risks, so that is that your business is disrupted by disruptive weather and so on, and that might stop people moving around and goods from moving around, as well as bringing down power lines and all of the things that we're seeing, tragically seeing unfolding more and more over the last year or two in terms of catastrophic weather events. The second type is called transition risk, which is that you don't keep up with the change of the type of economy we need. So this is one where banks that are heavily invested in fossil fuels, the argument would go, and haven't invested in renewable energy, are at risk of their investments becoming redundant. They haven't moved with the times in terms of the technology. There's an interesting question about whether you get the same thing with social trends towards eating less meat. That's a transition towards a different diet, and so what does that mean for the sort of companies that you're investing in or lending to? So this is all very interesting, but you might notice one thing, that this is all about protecting banks from the impact of climate change. Now, what we really want to be talking about is how the climate can be protected from the activities of banks. The other way around, right? So I think it's useful that banks and other financial companies have been, well, some of them have embraced it enthusiastically, and we must always remember that there are ethical banks such as Triodos and Charity Bank and Unity Trust, and some of the newer banks have a better record on customer service, like Starling Bank, for example. So, but really, the bulk of the industry is being pushed into thinking about climate change more seriously. But as I say, the first step has been to try and figure out how the bank can protect its own shareholders from the impact of climate change. And what we really want them to be thinking about is how they can contribute positively as banks towards financing the shift in society and the economy towards one which produces good social outcomes, but crucially stays within our ecological limits. And if I can say one more thing, I mean, to end on a piece of good news, I suppose, is that there is an initiative which I've been involved with and led by the London School of Economics, Grantham Institute, and involving most of the major banks and financial companies in the UK, called Financing a Just Transition Alliance. And so there are plenty of people within, with all major banks and financial companies who are, applying themselves very seriously and diligently to exactly that question. How can they, as financial institutions, what do they need to do to finance the socially just transition to a net zero carbon economy? So I think it would be wrong to sort of paint a picture that none of these big corporations, that nothing's happening, that they're doing nothing. I mean, I would say they're not doing enough, they're not moving fast enough, and maybe many other people would say that as well. But I think it's fair to recognise that there is action happening, and there are groups industry-wide having these conversations.
Yeah, absolutely. And just thinking of the risk of climate-related financial crash. It would be a biggie probably if we haven't sort of solved some of these problems and banks aren't moving fast enough on reducing their exposure to climate-related risk. Is there a way? Let's just say the banks just aren't doing anything. They're not acting. They're expecting more bailouts. Should something like that happen, is there a way that customers can protect themselves against, picking up the costs of these financial losses that the banks might experience in such a crisis?
Well, I think again, we need to distinguish banks from other forms of investment that you can make because of that crucial difference with banks that are part of the financial services compensation scheme that up to £85,000 per person, it is essentially backed ultimately by the state. Now you could take a view that the UK itself might go bust, but I think any any economy with its own central bank that issues its own currency can't really go bust. So I honestly wouldn't want people to lose too much sleep about whether a major bank being overexposed to climate risks, therefore suffering big financial losses, that they would therefore lose their savings. I mean, that's the point of the financial services compensation scheme, really, is to alleviate that worry. I think obviously if you've got funds that are invested in the stock market or in a pension fund, then that is a much bigger worry. And I have to declare here that I am an advisor to an ESG fund manager called Lion Trust Asset Management. So I have to declare an interest. But what I have done with my own pension is make sure it's with a fund manager that only invests in companies with a very good environmental social governance rating. So you are absolutely trying to protect yourself from the risk of having investments in companies which are kind of invested in yesterday, is the way I like to think of it, rather than invested in tomorrow. We want companies that are invested in the industries of the future, and those are the ones which contribute positive social and environmental outcomes. So that was a bit of a long-winded way, I guess, of saying that with banking, it's slightly different. I'm not sure that the concern there is that you might lose your money. I think the concern there is how is your money getting used and what damage is that doing to the place you live in, and the planet you live in. I think it's a bit more of a direct threat with other investment funds in the stock market and so on, where, you are, there's an absolute financial risk to you there if you're invested in the wrong sorts of companies that are exposed to, to climate change risk.
Yeah. So just thinking about where people can find sort of ethical banking services, are there any good resources out there that people can use to see what the options are and what the alternatives to the big high street banks are?
Well, I think you already highlight on your site that Ethical Consumer publishes ratings, which magazine does as well, the Consumer Association. You have to pay for both, but I mean, I think that's only fair because it's quite a lot of work for them to do the assessments of the ratings. So I would encourage people to think carefully about who they bank with and to consider switching. I know it's a bit of an effort, but in the big scheme of things, it's not that much of a huge effort. And certainly those are two really good sources. And unfortunately, in the UK, I don't think the list is particularly long. So you can consider building societies for savings, and the likes of Ecology Building Society, in particular, for example, does great work in lending to environmentally beneficial projects. You've got, I've already mentioned, outside the building society sector, you've got the banks, Triodos Bank, Unity Trust, Charity Bank, and Cooperative Bank, has a very clear ethical policy for its lending. So, you kind of know what they're good on that transparency. Triodos is excellent on transparency. So, you do have some choices. We think there should be many, many more choices. I mean, the US, the good old US of A, which we think is a sort of the height of capitalism, has over 400 mutual banks, right? That's leaving aside all of the credit unions, community banks, of which there are thousands, that you can also choose from. So unfortunately, it sort of comes back to, I think I think we need to have a more choice of what kind of bank you can go to in the UK. Actually, I've got one more thing. I did mention them before, but obviously we do have some new banks that have appeared on the scene in the last sort of 10 or so years, of which you could mention Starling, Monzo. Now they do quite well on ethical rankings. And I've got no particular reason to criticise them other than to note that you could say that's because they haven't been around long enough to do anything bad yet. So the question I always have for people is that what is it about a bank's structure and ownership and what it states about its purpose and mission, right? What is it about that that's going to make sure that it always strives to avoid doing harm and to to do good things for the people and planet? Because that's why we like the mutual form, because ultimately it's kind of locked into the structure of the organization, that it will always act in the interests of its members. Whereas if something is owned by venture capitalists, or floats on the stock market, then ultimately it is there to deliver the maximum financial returns to its shareholders. And there will come a time where managers have to make a choice between the thing that makes the most money and the thing that does the best result for people and planet. And if those two things don't align, then a private or stock market or venture capital owned company will choose the thing that makes the most money.
So what can we do about, apart from setting one up like you have? I mean, what can ordinary people do about seeing more mutual bank options in the UK?
Well, not much, to be honest, at the moment. The it's rightly extremely arduous to get a banking license. I mean, it should be. That makes it expensive. It's a process that's measured in years, not months. It needs tens of millions of startup investment to start a new bank in the UK, which is why there haven't been a huge number, and why trying to start a mutual bank in particular with this more sort of social and long-term patient orientation is quite hard. So, and that's not really a game for ordinary investors or members of the public to get involved with, because it's all quite high risk stuff. But I suppose that there's two things you can do to try and bring about a better banking industry in this country, I suppose, and we've kind of mentioned them both. One is to do the obvious thing, which is to vote with your feet, and we've discussed a lot about how to make good choices about who to bank with and what to think about, and name some names and places you can go for advice. And the second thing we've also mentioned, which is when you do get a chance to vote, vote, consider as part of who you're going to vote for in terms of who's going to run our country, ones that express, that say that they want financial services to be regulated in a way that delivers good social and environmental outcomes and outcomes for consumers. And it's perhaps a slightly boring topic compared to all the other things that governments need to deliver that are really important to us as citizens. But actually, we found in 2008 that when your banking system is teetering on the edge of crisis, then that affects everybody really badly. So it is an important political issue to make sure that we have a government that's prepared to hold bankers to account and not appear to be in their pocket.
Yeah. Just two more questions now.
Sure.
So the first one is, I mean, how much hope do you have for a finance industry in the UK that cares more about, people and planet, the well-being of our society, and our climate? Do you have much hope for that? Does anything give you optimism that we're moving in the right direction?
Yeah, listen, I think we are moving in the right direction, and this is partly a social change, and this is partly, it's a bit of a cliche, but millennials looking for more purpose-driven companies to work for. I mean, now we've got Gen Z coming through, where perhaps that's even more so. I mean, it's the generalization, of course, but it's certainly, people have seen in the banking industry as in other companies that the younger sort of people coming through and rising up to run those companies are more concerned, are more aware, perhaps we could say, of the social and economic dimensions, whereas the previous generations weren't aware of it because perhaps it just wasn't as big an issue. So I think that's got to be a positive. And I think there's also, there are changes in regulation that have come through. There are these industry initiatives like the one I mentioned, the Financing a Just Transition Alliance. I guess the two things which temper my optimism are, firstly, none of it's quick enough. This is a climate and biodiversity emergency that we face. And I would prefer to see big, bold action from banks about activities they will no longer finance and the ones that they will prioritize financing to help us along the way. I mean, one of the things that's been really highlighted to people now is the importance of warm homes, and the cost of retrofitting the UK's aging and quite inefficient housing stock up to the point where everybody's doesn't have to cost them an arm and a leg to heat their home, but it's a warm home. But also that's the same home that then is saving damage to the planet, isn't it? Because it's one that isn't consuming lots of energy. Banks could play a massive role in making suitable financial products available to everybody to be able to upgrade their homes. That should be far more of a priority than financing private equity buyouts of companies to sweat their assets, or financing, to be honest, dying industries like fossil fuel driven cars, which frankly, personally, I can't believe you can still even buy them, really. I think it's a bit of an outrage, but there we go. People will say, yeah, we still need to get around. I mean, to be fair, until we've got decent public transport for all, then we are still reliant on cars, sadly. But yeah.
I mean, that retrofitting point, it's so important, and it's a no-brainer, isn't it? We can reduce emissions and the costs of energy for regular people. It just, they should definitely.
Well, unfortunately, the other thing that can go wrong here is, of course, policy going in the wrong direction. I mean, treading carefully, because I don't want to be partisan, but certainly you'd like to see governments aiming for the highest standards in building as quickly as possible, for aiming to steer the energy system towards renewables as quickly as possible and away from fossil fuels. I think what's interesting about that is that makes a lot of sense economically. It's also pro-business. I mean, there's a as I mentioned before, what businesses really like is what I've heard people refer to in the past, and I quite like the phrase, investment grade policy. What that means is that you have a long-term policy framework that's set. It sets the rules of the game. Business is a bit like a game. There are rules of the game. You play the game. Some people were really good, they win, others lose, and that's what's quite nice about business, because you're encouraging that competition, encourages excellence, I guess. So that these are the positive case for markets. But markets, like games, like football, like any other game, needs a strong set of rules and a good referee, and then everyone knows where they are, right? And the rules we want are the rules of a really good game, which is markets that deliver fantastic environmental and social outcomes. So it is entirely pro-business to aim for the highest possible environmental and social standards in the markets that you have in your country. So again, I think that's what, as well as consumers, I think as citizens, that's what we should always push our governments to deliver, and not be fooled by some idea that that's anti-business in any way. It's absolutely not.
Absolutely. Yeah, no, thanks for that point. Okay, last question, and it's one that I've asked everyone who I speak to, and it's around, well, it can become so easy to become disillusioned and worn out when fighting against the tide of climate change, poverty, injustice. It can become quite easy to feel quite down about the world. What do you do to remember and reconnect with what's good in the world right now?
Well, the I'll tell you what gives me a lot of positivity is what we're working on at Southwest Mutual now, which is our first product, which is lending towards agriculture business that want to transform into more nature-friendly farming practices, so agroecology or regenerative farming, to use the buzzwords, but essentially nature-friendly farming. And by focusing closely on this sector, which we think needs a lot of money to help farmers to transform their businesses in this way, right? I come across, very often the astounding results that you get when you do this. And, in short, nature's amazing. If we stop wrecking the natural world, its capacity to recover is astonishing. And so, as grim as the continued environmental destruction that we can see around us is, I think what gives me hope is to see the examples and where people have done this and landowners have done this is how quickly biodiversity can return and how fully natural ecosystems can be restored. So if we just give nature a chance, she can heal herself.
Yeah, that's lovely. And I always think, nature will be okay in the end. It's us that we need to worry about. It's all the kind of, it's us that aren't surviving.
Well, I think a final thought on that, and if I can maybe put in a quick book plug, not my book, but I'm rereading an influential book in my life, which was Small is Beautiful by E.F. Schumacher, published in 1973. And it was one of the sort of early ecological economics textbooks, I suppose, or series of lectures. But he goes into Buddhist economics and a lot of the philosophy around our relationship with the natural world. And of course, the key thing really is to see ourselves as part of nature and not separate from it. So we harm nature, we harm ourselves. It's self-harm, right? And that's not a good thing to be doing. And as Schumacher puts it, he says that man talks of a battle with nature, forgetting that if we were to win that battle, we would lose the war. So it's kind of nonsensical to be fighting against the natural world. We are part of the natural world, and we need to live in harmony with it. And that's a sort of bit of a change of mentality. We don't want to conquer, nature in any way, because we are part of the natural world. So striving towards that harmonious, relationship with it, I think, requires a little bit of a change in mindset, perhaps, as well as a change in practice.
Yeah. Amazing. Well, thanks. What a note to end on. And I really, really appreciate you speaking to me. That was just such fantastic information. I'm sure lots of people are going to learn so much from that chat. So thank you.
Pleasure to be with you, and thanks for inviting me on.
Yeah, great.